The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's get caught up on what this market trade action is looking like as we near the end of the week. A fairly mixed session, I would call it, on Thursday, with some green in corn and soybean trade, along with soybean oil. A little bit of late session strength in soybeans in particular. Looking at mixed action in livestock trade, a quiet day in the outside markets. Let's run through things. Joining us for analysis, Brian Doherty, Senior Market Advisor with Total Farm Marketing. And Brian, good to talk with you again this week, and a little bit of late session buying in some of these contracts, but Thursday's trade overall, I'd say, was a fairly quiet, kind of choppy day for most of it, I would say anyway.
Yeah, I'm going to agree with that, with the exception of soybean oil. Really strong close into the finish. We continue to see money flow into the oil. We continue to see and hear talk of increased demand for oil products, oil energy in particular. So good movement there. You've got the now. I always say markets move on perception, momentum, and attitude. You've got momentum now moving into soybean oil, and then you've got this big picture perspective on soybeans. Well, they're pretty cheap, right? They're not really
Mhm.
attractive to farmers to plant. We've got to carry out, somewhere in that 380 million bushel mark. It doesn't take a rocket scientist to kind of figure that, boy, from what we're hearing, and that's all it is, it's hearsay. What we're hearing is some farmers say that, look, if planting goes well, I'm probably going to go a little more corn. The November bean futures just haven't rallied to make it attractive. So there could even be some more corn acres there. And so the bigger picture, ideas that beans are finding some support there. A little bit counter seasonal, considering that what South America just has for production. It's huge. The other good news is China's buying beans. They're buying from Brazil, though. So I'm going to say good news because it's Western Hemisphere beans. And I guess one bean less in Brazil is maybe one more bean that can be exported from the U.S. somewhere down the road, in particular, if they can get this kind of rhetoric straightened out on whether or not tariffs can come down or not, or if they're actually talking or not. When I say they, China and the U.S.
Well, and that's a good point you bring up, is that there's kind of conflicting reports on this. China says they're not talking to the U.S. until they get rid of all their tariffs. President Trump says, we're going to be very nice to China and we're talking and things like that, among other trade negotiations. Japan, India, rumored to be close to a finish line, so to speak. But just all this outside market chatter and noise and conflicting reports, I think, adds to some of the overall choppiness here in this window where seasonally we tend to kind of drift around a little bit in some of these markets.
What I was going to tell you, Jesse, was if we did, and we've been talking about this really since the election, but we've been talking. If we, let's say we didn't know anything, that there were no tariffs and none of this stuff, and you look at the charts, really? I mean, we're assigning volatility to all this uncertainty, which is probably true. But if you look at the price, look at December corn futures price. It's the same price it's been for multiple months. If you go back and look back further and further, it's some months been higher, some months been lower, but it's right in the middle of its range. So it's factoring in bigger crop production numbers. The tariff talk, often like weather talk, often like other news events, are sometimes factored in pretty quickly and kind of lost. There's a lot of music there and a lot of chatter. I think the big story so far this year is Brazil has produced a whopper of a bean crop. China has diverted their purchases to Brazil, you can say for whatever reasons. And yet we continue to sell corn extremely well in the U.S. The USDA did a really nice job of reflecting that in the last USDA supply and demand report, with a big bump in exports. So when you kind of step back, the more things kind of change, the more they stay the same. What's not happening of consequence in the grain markets is there is no weather market of consequence right now. Brazil is getting good weather for second crop corn. That's keeping December corn prices in check. Brazil harvested a big bean crop, right? The U.S., rain on the radar, rain in the forecast. Is that negative or positive? Depends who you talk to. So it's just not enough to sway the market, I think, directionally here on April 24th.
So that brings up a thought to my mind that I'll ask you with the way things have been acting and where a lot of these prices are at the same levels they've been at for several months, minus the volatility. Does that potentially lull farmers to sleep? And maybe this is a window they should be getting some, risk management on while we're kind of hovering around some of these same prices. I guess talk to me from a risk management standpoint. What should we be thinking about as we kind of drift around these same ranges, Brian?
I don't think so is the answer to the question. Doesn't lull farmers to sleep because everybody's looking at margins are pinched, things are tight. What it's let's use the word lulled farmers into maybe in recent weeks is a lack of action just due to a lack of any real breakout one way or the other. And I think farmers on again, this is one person's opinion on beans from long ago and corn here in February. I think they anteed up and sold a lot. Not everything. Nobody hardly does when they've got three quarters or all of their crop in the bin. So I don't think there's quite that urgency there on farmers to have to sell. On the other hand, it is April 24th, and I'm hearing in the voice of farmers, they're starting to get a little bit more edgy. The market's had some opportunities to rally. And what does it do? It rallies and kind of setbacks, rallies and setbacks. Look at these corn got up to what 468 last week and quickly, under 455. So a quick 15-cent drop off there. Um, Probably the disappointing when we look at the game big picture, disappointing market has to be the wheat complex. The funds are just very, very short that. The managed money is likely trading downward momentum, and that's discouraging with Kansas City wheat breaking into new lows this week on rain in the forecast. Yet when you look at exportable supplies, those numbers are still tight worldwide. As to your point, looks like we're making some trade negotiations with other countries. Boy, you'd sure like to see that wheat market stop being a wet rag on the corn and bean markets, in particular the corn market.
That's a great point. Great point. Thinking about this along these same lines, looking over at livestock, cattle, hogs, dairy, etc. this week. I mean, any differences on the protein side of the ledger that you're paying attention to here this week, Brian?
Well, if you see me rubbing my neck, it's looking at the milk market here the last 48, 72. It's really been back and forth and up and down, a lot of volatility. Often a sign that a market's trying to find its traction, whether it's the low is in or not. And there may be some argument. And it felt pretty good about yesterday's trade activity, and today, as we talk, may melt down 34 cents, which in the milk world's a pretty big move. But a really disappointing cheese market today, down 9.5 cents in barrels and 6 cents in the blocks. And butter can't get off the starting blocks. So the market still apparently views that the inventory up front is just enough to get by. Nobody seems to be chasing. Is that a sign that the economy is slowing? Or people are concerned? Maybe. I think it's just a sign that the marketplace is just sort of stagnant for dairy. Now, the opposite for a beef, the opposite for the live cattle futures, feeder cattle futures, as one customer put it, they didn't make any more cattle between the last cattle on feed report and this cattle on feed report. So the report's confirmed tight inventory, but amazingly good demand at high prices. So I've been a little bit more concerned that the market could break out at any time, and we got a taste of that here a few weeks back, and it roared right back. So that's a good strong market, good underlying market. Yet continued to expectations for steady to firmer cash this week. We're hearing whispers of 212 to 215. We'll see if that really, bears fruit. But good market. Didn't do a whole lot today. Seemed to kind of stall out a little bit. But you had, just to put this in perspective, in the June cattle, a pretty hard correction. And June bottomed here at 190, 180. So basically 192 and now trading at 208. It's a $16 rally nearly nonstop. And that's in 2 weeks.
Mm-hmm.
So pretty impressive recovery. Feeders continue to look like they're on fire. Buyers are continuing to buy. They got, the vision of cheaper corn out there. They're buying feeders.
Well, Brian, good thoughts as always, and I know we're going a little shorter than we normally do here today, but I'll throw it to you. I should have some intro music for final thoughts. I always like to do this here at the end of a segment. I mean, what would you reiterate to folks as they're looking at the markets here? We're nearing the end of the month. Planting season is really in the upswing, et cetera, et cetera. What would you tell folks? What would you leave them with this week?
Well, I'd leave with a couple of things. First of all, let's start where we ended in the cattle complex here. A good rally in the cattle complex. Good reason to think, or not a good reason to be defensive minded, right? I like the rally. I like the tight supplies. But historically, in any market, but more so in meats, demand can be so fickle. It can turn off in a 2 week window. So uh, be prepared to defend prices. I would look at the put options there. So that's cattle. Grain markets, just be vigilant. Look for opportunities. Don't get lulled into complacency. Get your crowbar out. Pry it under the rocks. See if there's opportunities. What that means is stay in touch with your elevators. Put in bids or offers that are acceptable to you. Try and work basis contracts if you can. I mean, to your advantage, or sometimes you get a push on sales if you want sales. But the calendar's kind of moving along, and we're here at the tail end of April. I think the weather forecast look you can find what you want in it, but I don't see any trends that are so significant that we're going to about see a change in price trends. So stay tuned, stay alert is my message this week. Be prepared is also a message. Those who are prepared seem to do pretty well, and just stay on top of it. The opportunities come and they go pretty quick, especially in the grains.
Brian, if folks want to reach out for a conversation with you there at Total Farm Marketing, how can they reach you?
They can reach me at 800-334-9779. And I'm happy to chat, talk, take a quick look at things. My hat's off to everybody who's working really hard. Just keep it safe. This is the time of year where your focus needs to be where it needs to be and getting the work done. But take 5 or 10 minutes and quickly look at the markets. You can do it on your smartphone. Give us a call, check in, make sure that you're staying on top of things.
Brian Doherty with Total Farm Marketing. Always great to hear from you, sir. Thanks for joining us. Have a great weekend. We'll talk to you next week.
Thank you much.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.